Hi there. Today we are going to tell you why your old tax spreadsheet could trigger HMRC fines in 2026.
What if I told you that a simple, everyday habit, something you've probably done for years, is about to become a one-way ticket to an HMRC fine? I'm talking about copy and paste. Yep, from 2026, for literally hundreds of thousands of us, freelancers, landlords, small business owners, that trusty old spreadsheet is about to become a serious compliance risk. Let's get into why.
Now, just so you know we're getting this right, everything we're about to cover has been put together by the expert tax advisors over at ProTax Accountant. These are the folks who are dealing with these new rules every single day, so you're in very good hands.
All right, let's start with a really simple question. How do you actually manage your business accounts right now? I'm going to bet that for a lot of you, the answer is a good old spreadsheet. It's simple, it's familiar, for decades it's been the backbone for so many small businesses. But here's the bombshell. Starting in April 2026, that completely normal action of copying your final totals from your spreadsheet and pasting them into the HMRC portal, well, that's about to become non-compliant. And yes, that could absolutely trigger a penalty. Honestly, this is the one thing that's going to catch so many people out.
This is exactly why we're calling it the spreadsheet time bomb. A habit that feels completely safe and familiar is now becoming a genuine risk. And look, it's not that spreadsheets themselves are being banned, not at all, but how we use them, and crucially, how the data gets from that spreadsheet to HMRC, well, that is being turned completely on its head.
So what on earth is causing all this? It's all down to a massive government initiative called Making Tax Digital for Income Tax Self-Assessment. You'll hear it called MTD for ITSA. In plain English, HMRC is scrapping that one big, stressful end-of-year tax return. Instead, they're moving everything to a fully digital system where you send them updates every 3 months.
You might be wondering, why are they doing this? Well, from HMRC's point of view, it's about two things. First, they want to cut down on mistakes. The thinking is that real-time digital updates will be far more accurate than trying to sort a year's worth of paperwork in one go. And second, it's just about dragging the whole tax system into the 21st century. The side effect for you, though, is actually quite useful. It means you'll have a much clearer, up-to-the-minute view of how your business is actually doing throughout the year.
Okay, you'll want to pay close attention to this part, because it's not hitting everyone at the same time. It's a phased rollout. It all kicks off in April 2026, and it's mandatory for anyone with an income over £50,000. Then, a year later in April 2027, that threshold drops down to £30,000, and the plan is for it to keep dropping after that, so you can see this net is getting wider and wider over time.
Let's just focus on that first number for a second, £50,000. And here's the crucial detail that could trip you up. This isn't just your income from your main business. Oh no, it is your total gross income from both your self-employment and any property rental income you have, all added together. Let's make this really simple. Imagine you're a landlord in, say, Birmingham, and your properties bring in 35 grand a year. But you also do a bit of freelance consulting on the side, which makes you another 20 grand. Well, you add those together, and your total qualifying income is £55,000. That means you're over the threshold, and you must be ready for MTD from April 2026. It's this combined total that's going to surprise a lot of people.
Right, so this brings us right to the heart of the matter, especially if you're a spreadsheet user. HMRC has invented this new rule called digital links. And this, right here, is the rule that officially kills copy and paste for your tax returns.
Let's just look at the difference, side by side. The old way, you do all your sums in Excel, highlight that final number, hit Control-C, and paste it into the box on the HMRC website. Simple. The MTD way? That data has to flow automatically, with no manual keying or pasting. Think of it like a digital pipe, running straight from your records all the way to HMRC, with no gaps where you can manually interfere.
And just to be crystal clear, this isn't my interpretation. This is a direct quote from HMRC. They have said, in no uncertain terms, that using cut and paste or copy and paste is not a compliant digital link. There is absolutely no wiggle room here. That keyboard shortcut we all know and love is now officially forbidden for tax emissions.
So the big question is, what is allowed? Well, a digital link is basically any automated transfer. So using formulas inside your spreadsheet to link cells together, that's okay. Exporting your data as a CSV file and then importing that file into an MTD-approved software, that's also okay. And of course, software that has an API that talks directly to HMRC's system, that's the gold standard. What's out? Manually typing numbers from one screen to another. And as we've said, the big one, copying and pasting your totals.
Okay, I know this all sounds a bit daunting, but please don't panic. The good news is that the path to actually staying compliant is really clear. HMRC has been very specific about what you need to do.
So, let's break it down into 4 key steps. First, you have to keep digital records. The shoebox of receipts is officially dead. Second, you have to use software that is on HMRC's approved list for MTD. Third, you've got to send in those quarterly updates. And fourth, at the end of the tax year, you're still due one final declaration, which basically ties everything together and finalizes your tax position.
This completely changes the rhythm of your year. Instead of that one massive deadline looming in January, you now have 5 smaller ones to think about. You can see the new schedule here. Your 4 quarterly updates are generally due just over a month after the quarter ends. So that first update of the year is now due by the 7th of August. It's a totally different mindset.
Now here is a fantastic pro tip from the team at Pro Tax Accountant. For that very first year, HMRC is giving everyone a soft landing. That means you won't get hit with a penalty if you file your quarterly updates late while you're getting the hang of it. But, and this is so important, this does not apply to paying your tax. The penalties for paying your tax late will still apply from day one. The soft landing is only for submissions, not payments. Don't get those two confused.
So, the clock is ticking. What should you be doing right now to get ahead of the curve and make sure you're totally ready for April 2026?
Look, if you're feeling a little bit stressed or overwhelmed by all this, that is completely normal. This is a huge change to a system that's been in place for a very long time. But the most important thing to remember is this: you do not have to figure this all out by yourself.
Honestly, the smartest and safest first step is to just talk to an expert. The team at Pro Tax Accountant lives and breathes making tax digital. They'll look at your exact situation, help you find the right software, and make sure this whole transition is as painless as possible. You can get in touch with them on WhatsApp or by phone at 07985 689912, or just drop them an email at info@protaxaccountant.co.uk.
And of course, we have to say this: the information we've gone through today is for general guidance. Everyone's business and circumstances are different, so it's absolutely essential that you speak with a qualified professional like the advisors at Pro Tax Accountant before you make any big decisions.
And finally, tax rules are always changing. To make sure you're always one step ahead and you understand what's coming down the track, a really great idea is to subscribe to the Pro Tax Accountant YouTube channel for all their latest updates. Thanks so much for your time.